An LLC does not protect you just because the letters are printed on a state certificate. This is founder filing, where we make the paperwork of starting a business simple and clear. Today, we are covering 5 costly LLC mistakes that can weaken the separation between you and the business. Commingling funds, sloppy records, no operating agreement, compliance lapses, and signing or funding the business carelessly. This is educational information only, not legal or tax advice. Liability protection depends on facts, state law, contracts, insurance, conduct, and court decisions. No video or service guarantees protection. If liability exposure matters, talk with an attorney and CPA before relying on general guidance. Piercing the corporate veil is a legal concept where a court may decide not to respect the separation between the owner and the entity in certain situations. The exact standard varies by state and facts, but the theme is simple. If the LLC is treated like a personal pocket, ignored as a separate business, underfunded, used unfairly, or run without basic formalities, the shield can be weakened. This does not mean every mistake destroys protection, and it does not mean LLCs are pointless. It means the protection works best when your behavior supports the separation. The do-it-today tip is to ask, would a stranger looking at my records see a real business or just my personal wallet with an LLC label? Commingling means mixing business and personal money. Examples include paying personal groceries from the LLC account, depositing client checks into your personal account, paying business expenses from personal cards without records, or transferring random amounts with no explanation. Mercury and Novo can help because they give you a dedicated business checking account and cleaner transaction history. Mercury fits startup style and online businesses. Novo fits many straightforward small businesses and freelancers. The drawback is that a bank account only helps if you use it correctly. Skip opening a new account if you plan to keep swiping personal cards anyway. The do-it-today tip is to move all business income and expenses through one business account starting this week, then label owner contributions and draws clearly. Sloppy records make it harder to show that the LLC is real, organized, and separate. Missing receipts, no profit and loss reports, no invoices, no written reimbursements, and no documentation for owner loans can create confusion later. QuickBooks is useful for owners who want software, bank feeds, reports, invoices, categories, and accountant access. Bench is useful if you want a bookkeeping team to handle monthly categorization and financial statements. QuickBooks' drawback is that you still have to learn and review it. Bench's drawback is cost and less direct control. Skip Bench if your budget is tight and you can manage simple books yourself. The do-it-today tip is to reconcile monthly, not annually, because memory disappears. An operating agreement is not just paperwork for multi-member companies. It helps show how the LLC is governed, who owns it, how decisions are made, how money moves, and what happens when something changes. For a single-member LLC, it can reinforce separation. For multiple members, it can prevent disputes that become expensive. The mistake is forming the LLC, downloading a template, and never signing or storing the final agreement. The do-it-today tip is to complete the agreement, sign it, and keep it with your formation records. The drawback of generic templates is that they may not handle unusual ownership, spouses, investors, sweat equity, buyouts, or deadlocks. Skip DIY drafting when partners, family money, or major risk is involved. Hire an attorney. An LLC can lose good standing if annual reports, franchise taxes, state notices, or registered agent requirements are ignored. A registered agent also matters because official mail and service of process need a reliable destination. Northwest Registered Agent is useful for owners who want privacy, mail scanning, and a registered agent address that stays consistent. Its drawback is annual cost, so skip it if you can responsibly serve as your own agent and do not need privacy. The bigger point is that missing notices can create penalties or worse timing problems. The do-it-today tip is to build a compliance calendar with state reports, licenses, agent renewals, and tax dates. The caveat is that rules vary by state, so check your state's official site. Undercapitalizing means running the business without enough money or insurance for the obligations you are taking on. Signing personally means you may be agreeing as yourself instead of clearly on behalf of the LLC, or you may be giving a personal guarantee. Some personal guarantees are unavoidable, especially with leases, loans, and credit, but you should know when you are giving one. The do-it-today tip is to sign contracts with the LLC name, your title, and your signature, and keep a copy. Also consider business insurance appropriate for your work. The drawback of relying only on the LLC is that lawsuits, contracts, negligence, payroll, taxes, and personal guarantees can create exposure beyond the entity. Ask an attorney before signing serious contracts. The solution is not complicated, but it must be consistent. Keep one business bank account, use bookkeeping monthly, sign the operating agreement, track compliance dates, maintain registered agent service, document owner contributions and draws, use contracts, and buy insurance where appropriate. Treat the LLC like a separate business even when you are the only owner. The do-it-today tip is to create a company records folder with formation documents, EIN letter, operating agreement, bank statements, tax filings, contracts, licenses, insurance, and annual reports. The caveat is that good habits reduce risk, but do not eliminate it. Liability outcomes depend on facts and law, and a court will look at behavior, not just whether you bought a formation package. Simple habits repeated every month can matter more than a perfect formation receipt. The LLC shield is strongest when your records tell the same story as your filing. This is a real business, separate from the owner. Start with a separate bank account through Mercury or Novo, keep books in QuickBooks or Bench, sign the operating agreement, and use Northwest if you want registered agent privacy and reliable notices. The biggest fixes are boring. Stop mixing money, document decisions, meet deadlines, and sign contracts correctly. This is educational information only, not legal or tax advice, and liability protection depends on your facts and state law. Subscribe to Founder Filing for clear LLC maintenance guides. The paperwork is simpler than it looks, so take it one step at a time, and when in doubt, talk to a CPA or attorney.